Sentiment within emerging markets in general is very poor at the moment. We've seen recent events in Argentina, Turkey and Italy spread contagion around all emerging markets. Within emerging markets, South Africa has even poorer sentiment, and that's due to political uncertainty. And we're seeing the impact of that come through in indicators such as the Business Confidence Index as produced by the South African Chamber of Commerce and Industry, which is at all-time lows relative to history over the last 40 years. When sentiment is poor, we see investors shy away from a market, and that market becomes uncrowded. And when markets are uncrowded and there's less competition chasing assets, we're bound to see more mispricings. And when there are mispricings, your returns are expected to be better. And that's what South Africa is offering at the moment. We're seeing a wide dispersion in valuation multiples, which are actually at extremes, where South African Inc. companies or companies that are exposed to South African GDP are significantly cheaper than markets globally. And the importance of those low valuations means that we lock in very attractive entry yields when buying those assets at depressed valuations today. There are reasons to believe that it's not all doom and gloom for South Africa at the moment. On the one hand, you have really good management teams who use the downturn to both take market share or engage in mergers and acquisitions. But also we have really strong pillars in South Africa when ranked in a global context, such as our National Treasury, our South African Reserve Bank, and also South African corporates whose balance sheets are significantly stronger than many global companies. We are finding opportunities in companies who face South African GDP. Those are known as SA Inc. companies. And most of those companies on our local exchange sit in the mid-cap space. So where we move down the liquidity spectrum, we're seeing valuation multiples in that space being as low as they've ever been. An example of this would be Udeco Industries, which was founded more than 100 years ago as a company to supply equipment to the mines. More than 100 years later, it's still a company that supplies equipment to the mines, and they've been through many ups and downs over that time. If we look at Udeco's track record versus the market, we've seen that Udeco has been a better quality business in the market, yet it trades at a deep discount to the market because of the fact that it faces South African GDP. At PSG Asset Management, we own more than 14% of Udeco, and Udeco is represented broadly across all our domestic funds.